Bitcoin does not behave like it used to. The 4-year cycle structure that everyone swears by is breaking down. And the reason is not a mystery. It's what happened to gold 20 years ago. When gold ETFs launched, the entire market changed. Liquidity changed. Volatility changed. Price structure changed. Bitcoin is now going through that exact same shift. So let me show you exactly how this plays out. This is the Crypto Mercenary. Let's get to work. Before 2004, gold was a completely different asset. It moved slow and it tropped sideways for years. Liquidity was really thin unless you traded futures or physically stored gold bars in a vault. Most investors were pretty much boxed out of the market, so gold behaved like a niche commodity with low participation and long dead zones. You'd get the occasional macro spike, but there was no constant demand and no easy way for large players to hold exposure. So ETFs really changed that path entirely. Suddenly, institutions did not need vaults or custodians or logistics. They could hold the equivalent value of tons of gold on a single sheet of paper. And then GLD, SPDR Gold Shares, launched in November 2004. This changed everything. Suddenly, every fund and every retail investor had a clean, regulated way to buy gold without touching any physical metal. The result was a permanent inflow stream, not hype-driven, not sentiment-driven, just steady accumulation. Price behavior shifted almost immediately. So look at this. Pre-ETF, gold was crawling. Post-ETF, gold went into one of its strongest multi-year rallies in its entire history. And this rally wasn't because of hype, it was because of mechanics. ETFs created a predictable sink for supply, so price started trending with fewer deep pullbacks. The market matured almost overnight. Silver followed the same pattern. Before ETFs, it was choppy and directionless. After ETFs, it exploded. The effect was amplified because silver had a smaller market cap, so inflows hit harder. And the volatility stayed elevated even after that parabolic move. Higher lows. ETF launched there. Oh, that's really interesting that the ETF price also became the new floor price. Wow, okay. Interesting thing to note. Okay, sound familiar? Because Bitcoin is now repeating the same pattern, only it's going faster. ETFs created a direct pipeline for institutional buyers who never touched Bitcoin before. BlackRock alone is pulling in more Bitcoin per day than miners can produce. And that's just one fund out of all of these. Before ETFs, Bitcoin was a pure retail asset. Ran on emotion, massive blow-offs all throughout its history. Massive crashes, deep 80% drawdowns, 4-year swings driven by halving supply shocks and speculative mania. Now look at Bitcoin after ETFs. The pullbacks are shallower. The recoveries are faster. Prices reacting to daily liquidity flows, not Reddit sentiment. ETFs are absorbing the supply in the background, which changes the entire rhythm of the market. No longer behaves like an early stage speculative asset. It behaves like an institutionally accumulated asset. This is why old models fail. High cycle tops, halving fractals, classic 4-year theory, they all come from pre-ETF era when Bitcoin lived and died by retail emotion. Now price structure is controlled by something that's never existed before, a constant inflow machine. When daily demand outpaces new supply, cycles extend and tops flatten. If you're waiting for an 80% crash, you're trading a version of Bitcoin that no longer exists. If you think you're going to buy the bottom after a long winter, you are using a model from a different era. The market is maturing, and this is a flow-driven environment. Accumulation matters way more. Positioning matters more. Missing a leg up is now far more costly than holding through volatility. What happened to gold in 2004 is happening to Bitcoin right now. The only difference is speed. Crypto moves faster, the liquidity is global, and the market reacts instantly. You're witnessing a structural shift that happens only once in an asset's lifetime. This is Bitcoin's gold moment. ETFs broke the old market rules. They brought new liquidity and new price structure. Adapt to the new mechanics or get left behind. This is the Crypto Mercenary. I'll see you next time.